Welcome into 47-degree Las Vegas, Nevada, where now apparently the sun goes down at like 3:30. Like, what's up with this? Thank goodness the shortest day of the year is coming very soon, okay? We've got a lot to discuss in today's video, folks. Obviously, right off the bat, we're going to have to talk about Tesla. Another massive move down today, over 4% down for the stock, down now 60% year to date. The indexes were all green today, and this stock just continues to get hammered. So we're going to talk about Tesla, what's going on there, and kind of my 2 cents, okay? And when the heck is this going to end? We're going to talk about CPI. Obviously, those numbers came in. I just want to dive into that and kind of give a quick opinion on CPI. I did see some very worrying price action in the market today that I want to take you guys through and show you so you're kind of aware of what's going on there. I think it's very important. And lastly, we're going to talk about a stock that I absolutely love that is in the gulag right now. And they just had some massive, epic news come out as well. And I want to talk about that one that I think is very important. And then we got maybe a couple other subjects to talk about, okay? First off, right off the bat, by the way, I appreciate everybody that subscribed to the channel. Thank you for being here. And thanks for smashing the like button. I appreciate y'all as always, okay? Tesla is now down to about a $500 billion market cap. This company, if we go back just to earlier this year, was at $1.1 trillion market cap. So basically, this company's lost about $600 billion of market cap now at this point in time, which is just a number that's hard to even fathom and get your head wrapped around. Now, and by the way, in regards to this number, this is actually inaccurate because it didn't update the market cap on Yahoo Finance here. The forward P on Tesla right now is under 30. Which is something we've never seen in history of the stock. It's the lowest forward P we've ever seen on the stock, which is quite extraordinary. Price to sales ratio now at this point in time, this is on trailing 12 month, not even a forward-looking basis. On trailing 12 month, is under 8 now. It's in the 7s. So all valuation metrics have obviously come down in an immense way for Tesla. And in regards to this stock is now back at the same price it was in November of 2020. So this stock's now at multi-year lows. You have to go back over 2 years ago to find it back at a level like it's at right now, which is extraordinary. And that just shows you how far this stock has really fallen now at this point in time. Now, a lot of people believe and are of the belief that the reason this stock continues to tank day after day after day after day has to do with Elon Musk and the Twitter stuff, okay? And here's what I can tell you. I can tell you that absolutely is a reason why Tesla stock has been falling so much. But the other component and the reason that is so overlooked in the market is I believe that a lot of big fund managers that do own the stock, because the stock is controlled by Wall Street now, I believe they are of the belief that analysts are going to have to bring down their numbers for 23 for this company, which is going to obviously impact growth rates and all those sorts of things, whether you're running numbers several years out or whether you're just thinking about 2023. And I am of the belief that Wall Street believes that's what's going to happen. And I also do believe that that's going to happen. And Wall Street is going to have to bring down their 2023 numbers. And it's just a question of, do they bring it down in the next 1 to 2 months, or do they wait more toward 3 to 6 months to bring down those numbers? But at some point in time within the next 6 months, likely analysts on average are going to bring down their numbers quite substantially. There's 33 analysts that cover the stock, so that's a lot. That's a lot of folks that are going to have to bring down their numbers, and you're going to hear these announcements about, maybe changing from buy to hold, or from strong buy to just buy, or from hold to sell. You're going to have a lot of those negative headlines coming out from the analyst community, in my opinion, over the next 12 months, versus we had kind of a super cycle of like analysts having to jump to the bullish side over the last few years, right? And you got constantly like, new analysts upgrade. Oh, they're up in their numbers, right? And now we're going to have a very different kind of next 12 months, in my opinion, which is going to be very different than the last 36 months we've had in regards to Tesla stock, okay? And so that's a huge thing. Now, if you look at something, right, you look at my big tech watch list here, something very interesting. You see what performed the best today out of the big tech? It's Meta. And obviously the stock that performed the worst today was good old Tesla. And this is very, very interesting because if you look at these stocks, for a long while, Tesla looked like, like it was the place to have your money versus Meta, right? Because Meta started underperforming way before Tesla did. And, this is the yellow line, there's Tesla stock, and the orange line's Meta. And there was such divergence. And at some point, there was even 20 to 30 percentage points of difference between where Meta was trading at versus where Tesla was trading at. But look at very recently, these two are getting very, very close to each other. Tesla's down almost 60% now. Meta's down 64.5%. So those babies are getting real darn close now at this point in time, okay? Now, if you look at since November 1st of 2022 of this year, right? Look at the difference in performance for these two stocks. Meta's up over 25% versus Tesla's down almost 30% since November 1st. Just a massive divergence here, and it goes to show you kind of how these stocks have performed just over the past, let's call it, month and a half or so. It's absolutely amazing, right? Now, my two main stocks in the public count right now in terms of biggest position sizing, one is Tesla, one is Meta, okay? Tesla's done a whole lot for me over the years. Meta's done a whole lot of nothing for me so far, right? And it's like, Meta, can you do something for me? Can you hit a little something for me, Meta? It's done horrible. Let's just call it what it is, okay? And it hasn't performed well, obviously, at all. We have a total loss of 1.9% on that stock, right? Now, if I had to guess, like, what stock's going to perform better and become a much bigger position in the portfolio over the next 1 year, do I believe it's Tesla or do I believe it's Meta? I believe it is Meta stock. I believe Meta will definitely outshine Tesla in the next 12 months. Now, with that being said, if you had to put me on a 3-year prediction, do I believe Tesla or Meta will perform better over the next 3 years? And I'm still a little leaning toward Meta, but that's a very tough decision. 5 years, I might be leaning a little bit more heavy toward Tesla in that sort of circumstance. So, but nonetheless, Tesla just has so many negatives going forward, and it's playing catch up. I mean, when you're in one of these nasty bear markets, I think this needs to be said. When you're in one of these nasty bear markets, it's just a matter of time before the market gets to all stocks. And Tesla was holding decent for a while there, right? And it was holding stronger than a lot of stocks. And now the market's gotten to Tesla, and it's going to continue to just kind of take that baby down here in the short term, right? Next up is Apple, and it's already starting to get Apple a little bit. It's going to get to Apple a lot more, and those were really the only two left that were standing that held up decent, right? One was Tesla and one was Apple, and they've gotten to Tesla now, and they're probably going to get to Apple a lot more in obviously 2023. And that's just the way when you're in a nasty bear market, man. By the end of that thing, it gets to everything. It doesn't matter what stock it was. It doesn't matter if it's an oil gas stock or it's Tesla or it's Apple. It doesn't matter. By the end of a massive epic bear market, it got to everything. We saw that in the great financial crisis. Okay, so CPI, as far as what's going on there, the number rose 0.1% in November. Now that came in a little better than expected, right? And obviously huge, great sign after October came in up 0.4. So things are definitely moving in the right direction. We're at 7.1% now, which is still an extremely high number. Let's call it what it is. It's still an extremely high number, but it is progress nonetheless, right? Now, the thing that's important to remember about this whole inflation number and not getting too excited too fast is, are things moving in the right direction? Yes, it's great news. But we are still a long way from where we need to be. The Fed can't even begin to start to chill and even think about a potential pivot until we get under 4%, but ideally under 3%. So when you're at 7.1, we're talking about at minimum probably 6 months before we get under 4, with a potential of being 12 months until we get under 4. It's still going to be a while because we went up so dang high. We still got some time that has to play out here. Many, many months at least, if not a year, until we get into numbers that the market can look at and be like, okay, we might have actually destroyed inflation. Because when you're coming in at 7.1, you still haven't destroyed inflation. It's like things are trending in the right way, but we have not won this game. Until inflation goes under 4 and hopefully even under 3, which is what the Fed really wants to see, until that happens, you have not defeated this beast. That beast is still out there. So as we come down, hopefully over the next 6 months, and we eventually reach 6s and 5s, and then hopefully eventually 4s, do keep in mind, it's not till we go under 4 that you can even begin to start to run a victory lap. And under 3 is when you can really run that victory lap, okay? So time still has to play out here. And let's not jump the gun in this. And the Fed's not going to jump the gun. And if anything, Jerome Powell probably going to talk down the market and probably say they're going to keep rates at 50% for the rest of eternity or something like that, okay? Because that man does not like the market reaction that they had out there, right? Now, speaking about the market reaction, did you guys see this? Because this is absolute insanity, okay? A friend told me that the Qs were up in the pre-market, like 5% plus. That's insane, right? And obviously the Qs, they finished green, but it was not anywhere even remotely close to that sort of day, right? And if you look at just where the market opened, the Dow, that is, right, we lost over 500 points as the day kind of trickled on there, which goes to show you how much weakness there still is in the market. And a lot of folks looking at this and they're saying, you know what? Yes, numbers are starting to trend the right way, but gosh, man, this is no time to necessarily go all in the market or something like that, right? In Wall Street, they want their bonuses. They want to try to make this little end of the year money. But at the end of the day, people are looking at this from a reality perspective, and they understand we've likely got a lot more pain to go. We've got more, likely higher interest rates to go, and for a longer period of time, right? And we also got some likely damage coming in the economy in 23 as the year kind of trickles along there. And for all those reasons, any major rally gets sold into right now. And even in this wannabe Santa Claus rally mode, you're still seeing that, right? And a lot of people are excited. They want to see the Santa Claus rally. But when folks understand that likely we're still going lower in 23, that's where people say, you know what, you sell into any rally. And that's where Wall Street looks at a lot of things from a very short-term perspective, right? Next 3 months, 6 months. And I think if you were to ask people on Wall Street, do they believe the stock market is higher or lower in 3 months from now than today? I bet you any money most folks on Wall Street would say lower, okay? Now, let's talk about the gulag, okay? I don't know if you guys ever played Call of Duty or any of those sorts of games, when you die in the war zone or whatever, right? You go into the gulag, and you get a chance to come back to life in the gulag, right? And there's a stock market gulag, okay, if you didn't know. The stock market gulag is where when your stock goes under $5, you go to the gulag, essentially, okay? And that's your chance to kind of prove yourself and get out, or you're going to die, right? And you'll never make it out. Some never make it out of the gulag. They go into the gulag and they never come out. They go bankrupt, or they just stay, down there for, a long, long period of time, right? For basically the rest of their public company's history, right? But some do get out of the gulag, and they never return back to the gulag. And it's up and up and up from there, and they go on to build great companies that are very respected. They go in to build profit and cash flow machine companies, and it's a thing of beauty, right? And so in regards to the stock market, there's certain stocks that go down there, right? And I definitely have a few stocks that are down there, right? And if we talk about my two small caps, right, that I bought the heaviest this year, right? One's been an absolute disaster, which is the Chef, right? But the other's been Honest, and that's got thrown into the gulag. And that's a stock I own 100,000 plus shares of that stock, right? And that's one that, in my opinion, will climb out of the gulag and will never return back to the gulag again. But it's got grouped into the gulag bunch, obviously, this year, like many stocks, right? And the amount of stocks that are in the gulag right now, I can't even keep track of them all. Like, I should create a list of just gulag stocks, like stocks under $5 right now, because it's so many I literally can't keep track of them, right? Now, did I buy way too many Honest shares? Yes. Absolutely. I went way too heavy into an unprofitable company like I did many other companies, right? But with that being said, this one I am fully confident they will make it out of the gulag and they will go on to prosper. Let me show you a few things, okay, that I think are very important. When it comes to 2023, 2024, in regards to Honest, they are now up to 6 million households in the United States of America have an Honest product in them, okay? They have massive household penetration of, there's 120 million plus households in the United States of America. And with their brand expansion, store expansion, all those sorts of things, they're likely coming in a lot more houses over the next few years. And so they'll likely build that number from like 6 million households to like 12 million households, right? They have massive store expansion going on right now. They just got into Walmart in a major way. They just got into Publix in a major way, and just got into Ulta in a major way, right? And they're going to have a lot of expansion opportunities in those retailers. And as you've seen with Honest over the past few years in regards to Target stores, once they get into a store, they're great at expanding products because they sell diapers, they sell wipes, they sell cosmetics products, they sell beauty products, they sell things like lotions and soaps and shampoos, so many various products that are all under the Honest brand. And so they do a great job of like getting in a store and then getting more products, okay? Massive margin expansion story for this company. Price increases is the first thing. They've just introduced price increases very recently on almost their whole product line over the last few months. They lagged on price increases, which was a bad short-term decision, but was a great long-term decision. Because when it comes to price increases, Honest took the approach of, let's go ahead and wait to increase prices. Let's let the big guys, right, their big competitors, do the price increases first, and then we'll do our price increases after, and we'll likely be in a stronger position. And that's exactly what played out. It took a margin hit in the short term, which obviously hurts their business, right, in terms of the margin numbers for 2022, but it helps their business in a massive way over the long term, rather than getting out in front of that, being the first to do it, risking market share losses or something like that, right? They waited on it, and it was a very strategic move, and it was the wrong decision for the short term, but it was absolutely the right decision for the long term. Bottom line with that. And sometimes as a company, you have to make a decision like, are we going to sacrifice the short term, or are we going to sacrifice the long term? And you sometimes only have one of those two options, right? And so those price increases are coming. That's going to help margins expand rapidly throughout 2023. Inflation pressures are, which by the way, I don't know if I definitely didn't spell inflation right there. A little spell check needs to be on here, right? Inflation pressures are going bye-bye for Honest now at this point in time. And the CFO said that's going to start to play out in early 2023. You'll start to see that play out, okay? And beauty and cosmetics are just a much higher margin business. And that business has started to scale very rapidly recently. And so that's going to be something that brings in much, much healthier margins than just the diaper business. Now, to give you some perspective on how much beauty and cosmetics products can help your margins, right? This year, Honest's margins were somewhere in rate a little above the 30s, right? A little above 30. And so if you look at a company like I own, which is called Elf Cosmetics, right? Elf Beauty, they have margins that are in the 60s, mid 60s, like 65%ish, right? And so Honest is not going to 65. They're not going to ever reach a number like that, in my personal opinion, although I'd be happy if they did. But there's a lot of expansion to get to this company to the 40s, which is also what the CFO actually has mentioned on their latest investor presentation, which I think is very, very important. And by the way, if you want access to the latest investor presentation that they did with Morgan Stanley that I reacted to, check out the pinned comment down there and you can get access to that. I actually just made that free. I wanted everybody to have the ability to kind of see, kind of what we talk about in there and whatnot, right? Profitability, as margin increases to the mid to high 30s, I think profitability is definitely in store for this company, and I'm starting to eke out some actual positive net income quarters as those margins increase rapidly throughout 2023 and into 2024. The company has a great balance sheet. It's not like many of the other companies that get dragged in the gulag that have very weak balance sheets and are in bad capital positions. This company's not at all. They have one of the best balance sheets you'll find out there for a smaller cap company. And they have the best management team and board of directors of any company under $1 billion. And I know a lot of small cap companies. I don't know one that I can say has a better management team and board of directors on the company than Honest, just flat out, okay? Now, you might never heard of this woman before. Amazon's Carla Vernon, taking the business world by storm, and she's just warming up. Article from December 2021 out of Forbes here, okay? Today, as Amazon's vice president of consumables, she oversees a $56 billion portfolio that includes all food, beverage, baby, household, paper products, health, and pharmacy products. This makes Vernon one of the highest-ranking African-American and Latino women ever at the online retail giant. She studied, obviously, a lot of stuff, and if I recall, she also is on the board of, she's a board of trustee, I believe, for Princeton, I want to say, as well, right? And she also has a great track record at General Mills prior to that, okay? And you might be wondering why I'm showing you this woman, right? Well, as it turns out, the Honest Company just named her their next CEO. Okay. And first off, I thought Nick was doing a good job running the company, but the stock price has done awful since they went public. They went public in 2021 at pretty much the worst time. The stock price has pretty much gone straight down. And so there's probably a lot of pressure on the board of directors to make a move there. And although I think Nick has put this company in a place to succeed over the coming years, at the end of the day, when you go IPO and your stock just goes down, next thing you know, you're in the gulag. You're a $2 chuck stock, right? The board of directors, and this is one of the best board of directors you'll find for a small company like this, they have to make a move, right? Now, the interesting thing is, look at how they talk about her, right? Afro-Latina. So she's a minority and she's a woman. And she's got an incredible track record, an incredible talent level, right? A woman like that could go anywhere. A woman like that can go anywhere and get a job anywhere, right? And so the fact that she takes this job as a CEO of Honest, right, goes to show you how much belief she has that this is going to be likely a great stepping stone for her. Because a woman like this, I doubt she wants to be honest for the rest of her career. She likely wants to be here for maybe 3 or 4 years. Tear it up, have the stock price go insane, right? Obviously increase revenues, margins, profitability, everything like that. Get the recognition, and then she can move on to maybe a Fortune 100 company, certainly a Fortune 500 company, but like a Fortune 100 company, and become the CEO of one of those companies because they'll be happy to take her in, right? So I think she identifies honest as this great opportunity to obviously be a huge boost to her career, right? And the company's set up in a perfect position where revenues, margins, profitability, cash flow, everything can increase rapidly over the next 3 or 4 years, and the stock price as well. And so she's going to have that behind her, and then in 3 or 4 years from now, she's looking great and looks like a hero, right? And then she can move on to one of the biggest companies in the world and run one of those companies at that point in time. So, you know, a woman like this, she doesn't just like pick a job to pick a job. She's making very strategic decisions. And you might say, how did they even get access to somebody like that, right? 2 words, Jessica Alba. And I'm going to keep talking about that over and over because you don't assemble the types of folks and get the sorts of talent at a company like Honest has without a superstar that can just attract the most insane people. You're like, how are these people working on this company, this little small cap company? How did we just steal a vice president from Amazon to come run Honest? You got to be flipping my flapjacks. How did we do that? How did we do that? Got to ask yourself, okay? My goodness, absolutely insane move there, okay? Hope you guys enjoyed today's video. As always, if you want to check out the latest, basically last night I did a 50-minute beast video. If you want me to send it over to your email or I can text it over, the full video from last night of going through the Morgan Stanley conference, the latest Honest conference and my reaction to it and whatnot. Basically check out the pinned comment down there and I'll send that over. Much love as always. Appreciate everybody. Subscribe to the channel and have a great day.